The Chinese dental implant market is undergoing a period of rapid transformation, fueled by regulatory changes, shifting consumer behavior, and technological innovation. The forthcoming implementation of Volume-Based Procurement 2.0, which is expected in early 2026, is anticipated to further reshape pricing and market dynamics, even though the specific details of the reform remain uncertain. This report analyzes the impact of recent VBP reforms on Chinese dental services industry. By examining key performance indicators, insightsZ identifies the structural challenges and strategic responses shaping the sector. The implementation of VBP represents a significant structural disruption that's intensifying margin pressures across the industry. Rather than expanding through increased geographic coverage or adding more operatories, DSOs are prioritizing footprint optimization, economies of scale, and service diversification. Even though lower implant prices theoretically stimulate demand, providers are contending with shrinking margins and slower than expected revenue growth. Here's a quick recap of the VBP 1.0. In early 2023, more than 55 dental implant manufacturers participated in the country's first VBP bidding program, organized in Chengdu. The outcome: 39 manufacturers were selected out of 55 applicants, procuring 2.89 million dental implant units, which sufficed approximately 72% of the country's annual demand for implant treatments at public hospitals, including military hospitals, and select private dental offices. All international dental implant manufacturers had to revisit their pricing strategy in 2023, offsetting the VBP price reduction targets and managing their supply chains for the significant volume growth. The Chinese National Healthcare Security Administration reported that the median price of premium dental implants belonging to Swiss brands dropped to $275 from $740, representing almost a 63% reduction, and that the average price of value implant brands fell by around 50%. This exceeded NHSA's earlier price reduction targets of 25%, making VBP 1.0 an outstanding success. In addition to unit price reductions, the government also made sure that the cost advantage gets transferred to the patients. The NHSA has even capped the medical service fees per dental implant placed at public hospitals at 4,500 RMB. For hospitals located in cities with higher labor costs, NHSA even approved higher fee limit, ranging from 6,000 RMB to 9,000 RMB, in order to accommodate for higher costs. The NHSA estimated that the new measures will halve the total cost of dental implant surgery in China, which varied from 4,000 RMB to 30,000 RMB before VBP 1.0 kicked in. The consumer preference for Korean brands continues to be robust, while there is growing competition from local Chinese rivals. Lack of in vivo clinical data and limited tech know-how meant that Chinese brands found it extremely hard to break ground and compete against their foreign rivals. So much so that even the country's regulatory framework, which favored domestic brands over foreign ones, was not enough to let the local homebrewed brands thrive in their domestic environment. The existing market share of local Chinese manufacturers in the country's dental implant market hardly exceeds 25%. On the other hand, foreign brands no longer command premium prices, and patients are often trading up implant brands to foreign ones. In other words, the perceived as well as real affordability barrier has been declining. Premium implant brands of European and North American origin continue to acquire higher market share due to lower pricing delta between local and foreign brands. In recent years, China has continued to outperform the global dental implant industry, demonstrating a year-over-year growth rate of 50%. Despite a low penetration level for dental implants in the country, China is among the top 5 largest dental implant markets globally. Not just that, the country accounts for more than 60% of Straumann Group's APAC business.
VBP 1.0 has pushed the country's dental implant market in the fast lane, as the number of dental implants sold in the country has demonstrated very strong growth post-VBP, in both premium as well as value, or so-called challenger segments.
VBP 1.0 led to price reductions of 50 to 60% for dental implants. VBP 2.0 is expected to drive further price pressure and margin compression. Public hospitals have started capping service fees, and central procurement mechanisms continue to reward compliant products with volume in exchange for significant pricing concessions. insightsZ has closely monitored publicly available announcements, media reports, and recent regulatory guidelines. Here's an overview of several key requirements and factors that dental implant providers are expected to meet under the VBP 2.0 framework. First of all, the upcoming VBP 2.0 cycle in China emphasizes local manufacturing as a pivotal criterion for market access. This focus significantly influences participation in public tenders and the commercial strategies of leading implant manufacturers and OEMs. Many companies are relocating production to China to align with this shift. Dental implants, categorized as Class 3 medical devices, additionally face increasingly stringent regulatory and technical standards. Secondly, the updated 2024 registration guidelines and the revised YY0315-2023 standard, which will come into effect from December 1, 2026, impose detailed requirements on various attributes, including product materials, surface treatments, microstructure, labeling, testing, and compatibility with other components. Implants must also demonstrate safety and effectiveness, often requiring comparison with similar approved products and documentation of clinical history. Thirdly, the regulatory environment is increasingly focused on local testing, biocompatibility, and alignment with national standards, pushing manufacturers towards compliance with Chinese-specific requirements to maintain or grow market share. For more details about the criteria, please refer to the insightsZ research report.
Here's a quick snapshot of how OEMs and brands responding to upcoming VBP 2.0. 1. July 2025. ZimV Inc. announced a strategic distribution agreement with Ostem Implant for China. Under the agreement, Ostem Implant will have the exclusive commercial responsibility for ZimV implant systems within the Chinese market. 2. Invista Holdings signed an investment agreement with the government of Suzhou New District in Suzhou, Jiangsu Province, kicking off its new manufacturing plant in China. The project's total investment budget is estimated to be USD 139.6 million and expected to commence manufacturing by mid-2028. 3. Straumann Group demonstrates strong progress in local manufacturing with the phased launch of its new Shanghai campus. The Basel-based dental implants leader is expected to locally manufacture approximately 80% of all implants sold in the country by fourth quarter 2026. 4. Ostem Implant opened its manufacturing facility in Yancheng, China, back in 2019. The company plans to increase the number of sales employees in China to 1,100 by end of 2026. 5. Dentium has doubled its number of sales offices in China and added a new milling center location. However, the company still manufactures dental implants based out of Korea and US. The company may need to make additional investments to ramp up their production locally in China to meet the VBP 2.0 criteria. July 2025, ZimV Inc. announced a strategic distribution agreement with Ostem Implant, expanding ZimV's premium dental implant offering in the Chinese implant market that's estimated at greater than 10 million units annually and enhance customer access to its innovative implant portfolio. Under the agreement terms, Ostem Implant will have the exclusive commercial responsibility for ZimV implant systems within the growing Chinese market, providing greater product selection for its vast customer base. Invista Holdings recently signed an investment agreement with the government of Suzhou New District in Suzhou, Jiangsu Province, kicking off its new manufacturing plant in China. The project's total investment budget is estimated to be USD $140 million and expected to commence manufacturing by mid-2028. The company is already manufacturing Spark aligners locally in China for domestic as well as international markets. The upcoming Suzhou-based manufacturing plant will introduce production lines for Nobel Biocare implants and Ormco orthodontic brackets, among others, for the first time to China. In fact, the new investment will make China the third country to manufacture such products after Sweden and the US. The localized manufacturing of Nobel Biocare implants demonstrates Envista Holdings' commitment towards meeting the upcoming VBP 2.0 requirements and compliance-related regulations. Being the first mover, the Korean dental implant leader, Ostem Implant, opened its manufacturing facility in Yongcheng, China, back in 2019. Ostem Implant continues to be the #1 player in terms of market share in the Chinese market as the brand continues to thrive in the post-VBP 1.0 era. Even before VBP reforms in the country, Ostem Implant's China business grew by plus 20% during FY 2022. During this period, its peer group, which mostly included leading North American and European implant manufacturers, demonstrated a top-line growth of plus HSD. Post-VBP 1.0, Ostem Implant clearly succeeded in outperforming all other foreign implant brands in the country, witnessing a growth of over 30% versus pre-VBP levels during 2023 and first half of 2024. The growth of the Chinese market for dental implants is driven mainly by the value segment, in which Ostem Implant holds the largest market share, thanks to its AIC training courses. The company plans to raise the number of sales employees in China to 1,100 by 2026 to respond to the evolving market requirements. However, speaking in terms of brand's recent commercial performance in China, the company's first half 2025 revenue decreased by about 20% on year-over-year basis. In 2023 and 2024, Dentium and Ostem Implant have continued to outperform the local home-brewed Chinese brands in the Chinese market. However, Dentium has been posting revenue declines for 3 consecutive quarters lately, primarily due to weakness in China, a region that alone accounts for approx 50% of Dentium's total revenue. In other words, the Korean implant manufacturer is clearly grappling with weakening profitability and slowing growth. Even though Dentium has doubled its number of sales offices and added a new milling center based locally in China, the company still manufactures dental implants based out of Korea and US. In China, Dentium witnessed its H125 revenue decline by 21.2% in the wake of weaker macro backdrop. To summarize, major Korean manufacturers, including both Dentium as well as Ostem Implant, have taken a significant hit in their overall top-line growth due to their high exposure to Chinese market. insightsZ follow the top 5 DSOs in China to understand the impacts of recent VBP reforms and predict what the VBP 2.0 could mean for the industry in FY 2026. We monitored metrics including pricing adjustments, number of visits, revenue per implant/chair, etc., to develop a deeper understanding about VBP impact on the Chinese dental services industry. Our findings concluded that VBP implementation represents a structural shock for the country's dental services industry, especially as it endures strong margin compression. That's not all. Instead of trying to expand by opening more geographical locations, or alternatively, adding number of dental chairs, DSOs are now beginning to shift focus on footprint optimization, realizing economies of scale and diversifying their services portfolio. In other words, lowering dental implant treatment prices is theoretically stimulating demand, yet DSOs and service providers are battling against declining margins and slower than expected revenue growth. So here's what we found. Downward pricing pressure and intense market competition led to ASP declines for implantology services by approximately 25 to 40%, eventually leading to a decrease in average spending per implant tooth in FY 2024 versus PY.